What is going on, guys? Welcome back to another market update. As usual, let's get straight to the charts. So we were talking about this yearly opening candle resistance line over here, and it's still continuing to act as very tough resistance, as you can see, but at the same time it's also forming an ascending triangle. So we'll have to see which sides Bitcoin decides to break to from this pattern. Hopefully we'll be able to break to the upside because usually ascending triangles have a bullish bias. So let's look at some targets over here. First, let's look at a potential break to the upside. So we just take the measured move over here, and this would bring us right to that zone that we were talking about. The most important resistance area for me would be the 105 to 110k region over here. This is where the toughest resistance really is, and if we were to regain this area as support, then bulls would be back in control. Let's also look at the bearish scenario, because if we don't manage to take out this resistance area over here, we could actually end up creating a disastrous bear flag, and that's something we definitely want to avoid. So let's take the measured move of that as well. For that, we just take this entire leg over here and put it to the point of the breakout, and that would obviously bring us to some very low targets. However, I'm a little bit more optimistic than that, and I don't think that's going to happen. However, if we are going to get a bearish breakdown, then there's a high likelihood that we're at least going to get a breakdown to the measured move over here, which would just create a slightly lower low over here. But as mentioned before, the more probable outcome is us breaking to the upside over here, because typically speaking, these ascending triangle patterns are a trend reversal pattern, or if we were to reach this area from the downside, then it would actually be a continuation pattern. And as mentioned in my previous video, if we do eventually manage to take out this resistance area over here, we'll still have to struggle with this and this resistance area before regaining bullish control. Next, let's look at our other charts and indicators to find some more clarity. Let's start with the DXY. So guys, we've been talking about this potential move to the downside here for the dollar, because this is exactly what we saw in the previous cycles as well. First, we had a massive move to the downside, which was followed by a bounce, and then we had our final capitulation. This happened in the previous cycle as well, as you can see. And this is our current base case as well. So Powell gave his speech during that Wednesday meeting, and he really tried to sound as hawkish as possible. And some people are interpreting this as a hawkish speech. So the Federal Reserve cut rates for a third straight meeting on Wednesday in what analysts call a hawkish move, an attempt to support a softening labor market while signaling reluctance to keep cutting. So obviously, Powell is really trying to walk on this tightrope over here because he doesn't want to be remembered as a complete loser when it comes to monetary policy, but at the same time, he doesn't want to be another Volcker causing another recession. He wants to be a better version of Volcker. And this is what he's trying to do. He's cutting rates, but at the same time, he's trying to sound a little bit hawkish over here. He actually just wants to prove Trump wrong and be remembered as the guy who killed inflation and managed to avoid a recession at the same time by having a soft landing, which has become a meme at this point. So, since he's going to be replaced in May, he doesn't want to completely kill the economy either, right? He wants to play this balancing game over here. So as the article is saying here, Trump's just going to replace him with a dove. So we're going to get a lot of monetary stimulus. We're going to get a lot of fiscal stimulus added waddle, which is obviously very bullish for Bitcoin. It's just going to accelerate the trends that the dollar has been following for the past century or so. And we all know what that trend is. We're just going to have to see whether this dovish monetary policy will actually help Bitcoin this cycle, or whether it will have a bit of a delayed impact and be the basis of the next bull market. Next, let's look at the unemployment rate, which is one of those charts that is actually showing a bit of a warning sign over here, because we are moving to the upside, as you can see, and if we are going to move past 5%, that's really bad. Many of you guys know that they're actually cooking the books because most people actually have to have multiple jobs to survive nowadays. And a lot of people who should be counted in the statistics aren't, because they simply haven't had a job for a long period of time, because they haven't been able to get a job. But that's another can of worms I'm not going to talk about right now. Anyway, when looking at the effective federal funds rate, we can see that the funds rate is coming down. And typically when this comes down, we've almost always had a recession. As you can see, it's very, very difficult to avoid it, because as you can see, monetary policy has a lagging impact. When they initially hike up the interest rates, this causes a lot of pressure on the economy, and this pressure usually has a delayed impact. So when they typically start easing monetary policy, that's when things are already getting out of hand and it's too late. But if we are going to get a recession, then nothing would make Powell happier than delaying it for as long as possible until his term ends. And then he could just wash his hands and say, "It wasn't me." Next, let's get to the news. And for our first piece of news, we have crypto giants including Ripple and Circle, who received preliminary approval from a top US banking regulator to establish national trust banks, in a major move that could further integrate digital assets into the banking system. The Office of the Comptroller of the Currency conditionally approved 2 new national trust bank charters from Circle and Ripple, and conditionally approved applications from BitGo, Paxos, and Fidelity Digital Assets to convert state trust bank charters to national charters, allowing them to operate across the country. If finalized, the National Trust Bank charters would allow the companies to manage and hold assets on behalf of customers and settle payments faster. The license does not, however, allow the companies to take cash deposits or make loans. So this is really important, because national trust charters are a huge institutional milestone, giving crypto firms more legitimacy and broader capacity to operate within US financial infrastructure. So for our next and last piece of news, we have some key 2025 crypto policy highlights. So TRM Labs reviewed 2025 crypto policy developments in 30 jurisdictions, representing over 70% of global crypto exposure. Stablecoins were a huge focus for policymakers worldwide, with over 70% of jurisdictions progressing stablecoin regulation in 2025. Increasing regulatory clarity also created major tailwinds for institutional adoption, with financial institutions in about 80% of jurisdictions announcing new digital asset initiatives. The impact of regulation on illicit finance remains clear. TRM analysis found that virtual asset service providers, which are the most widely regulated segment of the crypto ecosystem, have significantly lower rates of illicit activity than the overall ecosystem. And here are some key policy decisions that will be made in 2026 as well. And the most notable ones will be the ending of the grandfathering periods for MiCA regulations in all remaining EU countries, and also the deadline for US federal regulators to issue final implementing regulations for the Genius Act. So one thing's for sure, all of this regulatory clarity will increase institutional adoption, but at the same time there's a risk of overregulation, which is something we've seen in the EU already, but the United States have been moving in the correct direction. Alright, let's get back to the charts, and let's start with Bitfinex longs versus Bitcoin's price action. And this is actually a chart I should have covered a lot earlier, because I was surprised to see how accurate the inverse correlation over here between Bitfinex longs and Bitcoin's bottoms really is. Obviously the inverse correlation isn't perfect, but it really has nailed the previous bottoms over here when you look at it. This top over here lined up perfectly with Bitcoin's bottom, and so did this top over here. You see, this was a bottoming period for Bitcoin, and even this little top over here lined up with Bitcoin's bottom over here before we had this massive rally. So let's see if this will repeat this time as well, because we have also produced another top over here. And when were the longs most elevated? It was right at the bottom of the previous bear market, as you can see. And what is the logic of this? Obviously, whales tend to do what retail doesn't, right? They buy at the actual bottoms and sell at the tops. Next, let's look at the money shift, and as you can see, the divergence between Bitcoin's price action and the money supply is getting larger and larger because the money supply just put in a new high again. This shows that there's a lot of liquidity left. And when looking at the S&P, it's still putting in new highs while Bitcoin is struggling. All of this is clearly showing that we're still in a risk-on environment. Gold has obviously been the spotlight of the year because Bitcoin has really struggled against it. And Luigi in Telegram also pointed out this chart over here. This is the Bitcoin versus gold chart. So this is essentially Bitcoin priced in gold. And when looking at this chart, Bitcoin is really bearish because we're below even the 200-week moving average. But this should also show that we don't have that much downside risk left anymore, historically speaking, because we don't stay below the 200-week moving average for very long. And this also reminds me of this mini bubble over here. We could be seeing something similar where we had our initial bottom, like this bear market had its bottom over here. Then we had a rally up and then a crash below the 200-week moving average over here before our final rally. But obviously, I don't think we're going to have anything like this cycle. However, some kind of bounce or upside is still definitely possible. Bitcoin dominance has also remained mysteriously low considering how large our crash was, indicating that altcoins are actually doing pretty well. ETH even had a bit of a breakout here against Bitcoin, as you can see, but obviously we have to make sure that this isn't a false breakout like something like this over here. We just have to see continued momentum. Interestingly, interest in altcoins has been dropping off a cliff over here, even though interest in Bitcoin has actually been increasing because we put in a higher high over here, and this could potentially be a higher low now. When looking at the crypto fear and greed index, you can see that we've made a pretty healthy recovery over here. We just have to hope that we're not going to get some sort of double bottom like this one over here, but even then the downside risk would be relatively limited. It also remains to be seen whether we will have 3 bearish months in a row over here, but there is still a chance that December could be bullish if we have a nice rally over here because we still have 2 weeks left and the current 1.82% decline is relatively small. So what do I see when looking at the overall picture? We're still hovering over the 100-week moving average over here and have some key resistance above us in the form of the 50-week moving average and the 20-week moving average. The bulls definitely want to avoid building a bear flag here in the short term or a head and shoulders pattern in the long term. When looking at the daily chart, you can see that we also have some resistance building up here in the form of the 200-day and 100-day moving averages. So if we're able to break out from this ascending triangle, we definitely have a lot of confluence here at this 110K region. We're probably going to get a breakout pretty soon here, possibly before this video is even uploaded. So we're going to see soon whether we will break to the upside or downside. My bias still remains bullish, however. By the way, guys, we've teamed up with this video sponsor BTCC and launched a little holiday campaign for the Bitcoin Powerlock community. I know a lot of you are always asking what exchanges I actually use or keep an eye on, especially ones that don't make you jump through a million hoops just to get started. One thing I like about BTCC is that it's one of the few non-KYC exchanges out there, which means you can withdraw up to 10,000 USDT per day without KYC. It's nice if you value privacy and don't want Big Brother to make you go through all the face scans and monitor your every step. They also have a great reputation because they've been around for a long time, over a decade. So this isn't some brand new exchange that popped up last week. The security is solid, liquidity is good, and they've got both spot and futures if that's your thing. Obviously, trading comes with its risks, so do your own research, but if you were planning to trade anyway, then BTCC is a no-brainer. They're offering a 10% deposit bonus and some nice additional rewards based on your trading volume if you use our link in the description. The campaign will last until the end of the year. This is Saverio speaking, and as always, thanks for watching.